All right, everyone, welcome back. We're diving into some serious market action today. Big moves, kind of surprising, the kind of stuff that makes you want to double-check your portfolio.
Yeah, definitely eye-catching stuff, especially that record-breaking S&P 500 close, above 6,000 for the first time. Huge milestone.
Really is. But what's interesting is what's pushing it higher.
Right, right. Not the usual suspects, really.
Not tech this time.
Nope. Consumer discretionary, financials, they're leading the charge this time around.
Huh. That is different. Tech's usually front and center in these rallies.
Usually, yeah.
And then on top of that, we've got small cap stocks suddenly going crazy. It's like all these mixed signals. What's an investor to think?
Well, there's this talk of some are calling it the Trump trade, making a comeback, like what we saw after the 2016 election. Investors going all in on sectors they think will benefit from those potential policy changes, less regulation, tax cuts, that kind of thing.
So financials and consumer discretionary fit that bill, huh?
Exactly. They're the ones expected to get a boost if those policies come back around.
Interesting. So does this mean investors are basically betting on a repeat of those policies then?
Could be, especially with the Dow also hitting a new all-time high. Seems like there's some confidence there.
So what does all this mean for, someone with a more diversified portfolio? Should they be adjusting anything?
Good question. It's tricky, right? Some sectors are skyrocketing, but others are lagging behind. Got to remember, those smaller companies, the ones attracting so much attention, they don't always have the earnings to back up their valuations.
So a bit of a gamble maybe for those jumping on this Trump trade?
Yeah, there's definitely some risk involved, no guarantees.
Yeah. And then there's tech. The Nasdaq barely budged compared to these other indexes. Is this like a sign that tech's dominance is over?
Hard to say for sure. It's more of a rotation happening right now. Investors moving into what we call value and cyclical stocks. Value stocks think of them as undervalued compared to their earnings. And cyclicals, they tend to do well when the economy is growing.
Makes sense. But is this the beginning of the end for tech?
I wouldn't go that far. The Trump trade might be picking up steam, but lots of those small cap stocks, they're lacking the strong earnings of the big players. Their sales growth is actually behind the S&P 500 overall. So, there's some risk baked into this enthusiasm.
Right. Got to be cautious about reading too much into those short-term trends.
Exactly. Things change quickly.
Speaking of things changing quickly, those U.S.-China tensions, they've been bubbling for a while, but now we're seeing real impacts, especially in tech.
Absolutely. The semiconductor sector is feeling the pressure. Taiwan Semiconductor Manufacturing, TSM, they're getting orders from the U.S. to halt shipments of those advanced chips to China.
Whoa, that's huge.
Yeah.
TSM's a giant in the chip market. What's the thinking there?
Well, it's directly linked to this whole U.S.-China trade war, shows how these geopolitical tensions can really ripple across industries.
Yikes. So investors holding semiconductor stocks, should they be worried?
I'd say it's something to watch closely for sure. The PHLX Semiconductor Index, that includes big names like NVIDIA and Broadcom, it's down over 2.5% and well below its highs for early this year. This whole situation could have bigger implications for tech as a whole,
Sounds like there's a lot of uncertainty there. All right, let's shift gears a bit. Let's talk inflation. Everyone's on edge about it. This upcoming consumer price index report, that could really shake things up. Everyone's waiting to see if inflation's finally cooling down.
For sure. The Fed's watching it closely. This CPI report could influence their decision on interest rates. They've got that 2% inflation target, remember? And they've been raising rates to try to get it under control.
Right. So analysts are expecting a monthly increase of 0.3% for core CPI. That's excluding the food and energy prices, the ones that jump around a lot. That'd put year-over-year core CPI at 3.3%. And for the headline CPI, the one that includes everything, the expectation is 0.2% monthly and 2.6% yearly.
Yeah, those numbers don't exactly scream mission accomplished on the inflation front.
True. But 1 month doesn't make a trend.
Exactly. It's just one data point. Got to look at the bigger picture.
Fed Chair Powell, he keeps saying he's looking at those 3 to 6 month trends to really see where inflation's going.
Smart approach. Need more data to get a clear picture.
And then there's China. Their consumer prices actually fell last month.
Oh, right, yeah. That sparked some worries about demand weakening over there in the world's second biggest economy. That could ripple outward globally, adds another layer to the whole situation.
It does. A lot of moving parts when it comes to inflation these days. So what's all this mean for the Fed? Will they cut rates at their next meeting or hold steady? What do you think?
Well, it's interesting. Earlier this year, the market was way out ahead of the Fed, pricing in rate cuts that the Fed hadn't even hinted at. Now we're seeing a shift. Longer-term U.S. Treasury yields are actually higher than the Fed's own projections.
So the market's changing its mind. What's causing that?
I think it shows how quickly sentiment can change, and how much uncertainty there is about what the new administration's going to do on the fiscal policy side. Powell even said it's too early to factor those changes in.
Makes sense. So where do things stand right now in terms of expectations? What are the odds of a rate cut actually happening?
The CME FedWatch tool, it's the one that tracks what traders are expecting. It's showing a 65% chance of a 25 basis point cut at the December meeting.
December, okay.
So that means there's still a 35% chance of no change at all.
A real toss-up then. It sounds like, what, we've got record highs in the market, but it's certain sectors driving it, and this Trump trade revival. Then there's tech, kind of in limbo it seems, and the CPI report everyone's nervous about, and of course the Fed and their rate decision. It's a lot to keep track of.
Definitely a lot going on. More important than ever to stay informed, understand what's driving the market.
Absolutely. So for our listeners who are just getting started with investing, or maybe want to learn more about how to handle these market swings, what advice would you give them?
I always say start with the basics. Understand how the stock market works, the different types of investments out there, and why diversification is so important.
Diversification,
Yeah.
yeah. Not putting all your eggs in one basket.
Exactly. Spread the risk. And don't be afraid to ask questions. There are so many resources out there. Online, your local library, even financial advisors, they can all help guide you.
It can feel intimidating at first, but taking control of your financial future is so important.
Absolutely.
So let's go back to some of the things we've talked about today. Given what's happening in the market with the Trump trade, tech's uncertain future, and this possibility of a rate cut, what are you watching most closely? As an investor, what really stands out to you?
Well, with the potential impact of this Trump trade, I'm keeping a close eye on financials and industrials. They're the sectors most likely to benefit if things like deregulation and infrastructure spending actually happen.
Because are you saying investors should be buying up those stocks right now?
Not necessarily. Gotta remember, every investment has risks. While those sectors have potential, it's crucial to do your research. Understand the companies you're investing in and make sure they fit your overall goals.
So be selective. Don't just follow the hype blindly. What about tech? Are you writing it off completely after its recent performance?
Not at all. Tech might be taking a back seat now, but innovation, those technological advancements, those are long-term trends. They're not going away.
That's good to hear. Tech's been such a force for so long, hard to imagine it just disappearing.
Right. But like any sector, gotta be smart about it. I'm particularly interested in those companies leading the way in AI and machine learning. These technologies are changing everything, and the companies driving that change are poised for big growth.
AI is definitely a game changer. We're seeing its impact everywhere. So you're saying, yeah, pay attention to the short-term stuff like the Trump trade, but don't lose sight of those bigger trends like AI, the things that are shaping the future.
Exactly. Those are the things that will create lasting value.
I'm with you on that. For our listeners who want to dig deeper into these trends, maybe look into some investment opportunities, what resources would you recommend?
Staying informed is key. Subscribing to reputable financial publications like the Wall Street Journal, Bloomberg, the Financial Times, that's a great way to keep up with what's happening in the markets and the economy.
Those are definitely classic, solid sources. What about for people who prefer something more visual?
There are some excellent financial news channels that do great coverage and commentary. Very up-to-the-minute stuff.
Makes sense. And what if someone wants a more interactive experience?
Then there are tons of online platforms and mobile apps, real-time market data, portfolio trackers, even educational resources, you name it.
So no matter how you like to learn or what kind of information you're looking for, there are resources out there to help you stay ahead.
Yeah, and remember, knowledge is power, especially when it comes to investing. The more you understand, the better decisions you'll make. And it's amazing how sometimes connecting the dots between things that seem totally unrelated can give you the best insights. Like, who would have thought that falling consumer prices in China could affect the U.S. stock market?
It just goes to show how interconnected the global economy really is. What happens in one part of the world can ripple out and impact things everywhere. Kind of like that butterfly effect we talked about before.
Exactly. What happens on one continent can totally influence another. It really shows why it's so important to have a global perspective when you're investing.
Absolutely. We can't just focus on what's happening in our own backyard anymore. Got to understand the big picture.
The big picture, yeah. And that's what we're all about here on the deep dive, right? We sort through all this information, news articles, analyst reports, economic data, and try to boil it down to the stuff that matters most for you, our listeners.
We want to give you the tools to make smart decisions, whether you're a seasoned pro or just starting out.
And we try to make it, engaging, insightful, maybe even a little fun, because finance doesn't have to be boring.
Totally agree. Okay, so as we wrap up this deep dive into record highs, surprising sector moves, and that ever-present question of inflation, we want to leave you with something to think about.
Okay, so given everything we've discussed, the Trump trade, tech's uncertain future, what the CPI report might tell us, the Fed's decision on rates, what's the one thing you'll be taking away from this?
What will you be watching most closely? What questions will you be asking yourself as an investor?
Because at the end of the day, it's your curiosity, that willingness to learn and adapt. That's what will help you succeed in the world of investing.
It's the real power of knowledge, right? It lets you take control of your financial future. So keep learning, keep exploring, keep diving deep. We'll be back next time with another deep dive. Until then, happy investing.